Hi, AJ Cataldo here. NetList up another 10.06% at the close today, or last night rather. New 52-week high of $1.86 per share 3 months ago. It was at 86.6 cents. So let's say from 87 cents a share to $1.86 a share, new high. Let's call it 87 cents a share to $1.84 a share. More than a double in 3 months. That's pretty good. 2.5 million shares traded. That's high volume. That's very good. Uh, there's something in Wall Street called the 3-day rule. Good news usually sends a stock up for 3 days. Bad news sends it down for 3 days. There was some good news with respect to litigation. Day one is over. Day two will be tonight, my time. About 11 hours from now for you on the East Coast, your time. Because everyone knows about Wall Street folklore and the 3-day rule, the market becomes more efficient as that knowledge becomes publicly and widely available. So it isn't really 3 days anymore. It's more like 2.5 days or 2 days. And if that holds true, I would expect the stock to go up again because it closed 2 cents off the new 52-week high. I would expect it to go up again today. But keep in mind, that doesn't necessarily have to happen because this news is not being picked up by Reuters. You're going to find it on StockTwits. You're going to find it maybe a little bit on Yahoo Finance, but StockTwits is where you want to go. One word, StockTwits, STOCKWITS. And I've already in a previous YouTube explained to you who you want to follow. You want to follow a guy called Stoked, capital STOKD. He is working his butt off, keeping us all informed. He's been doing it for a few years. Everyone respects him. He's doing a great job. Follow him. It doesn't cost you any money. You can register for StockTwits for free. You can follow him for free. And I think more than a double in 3 months is a pretty good rate of return. Yeah, the S&P 500 past 3 years consecutively 18 to 20% for 1, 2, 3 years in a row. That's a great return. Nothing wrong with that. But you might want to nibble, go ahead and keep most of your portfolio in the S&P 500. Passive investing, that's a good idea. Nibble a little bit of some of these higher risk stocks. Now, NLST or NetList, as time goes on, it's becoming less and less risky. But as time goes on, the lower risk is associated with an increase in the price per share. And so the rate of return or the potential is lower and lower if you want to look at it that way. If NetList inks a deal and publicly makes it available with SK Hynix, okay, and I've already covered that in an earlier video, and if you want to go to StockTwits, you're going to see all kinds of discussion about that. If they ink a new contract, the current contract, it was for 5 years, it expires at the end of this month. Today is March 25th. It expires in 6 or 7 days. 5 years ago, when the original contract for 5 years was inked or noticed or made publicly available to public, when the public was notified, it was April 5th. So it might be 10 days before, if history repeats, before we know. Either they're going to have a new deal, a new contract, or they will not. If they do not, and nothing else good happens, I would expect the price per share to drift down slowly over time. But that's only if nothing else happens. They keep getting these lawsuit wins for economic damages that are already locked in, unless these constant delays by Samsung and Google and Micron, unless they are successful. And that's what the attorneys are going to do. They're going to ride this till the wheels fall off. They're going to do everything they possibly can to delay. Normally what they do is they hope the company's going to go bankrupt. I don't think that's going to happen with NetList because stock price has gone up and they have a nice little pile of cash. And with the increase in revenues from chip prices that are increasing, I don't think they're going to have to dilute anymore. I could be wrong. So, not investment advice. Make your own decision. All I'm doing is trying to get you to monitor a stock. You can nibble a little bit. Don't bet the farm. Don't be a pig. Pigs get slaughtered. I'm holding on to my remaining 6,500 shares. It's in my IRA. I'm very happy just watching it go up a little bit every day. I'm retired. I don't need that cash. I don't anticipate needing it. And like, subscribe, have a good day. I'm going to do something different tomorrow. I'm going to show you a trade and the results on a covered call for a stock and show you how to make a pretty good return. Maybe a little bit more than 100% per year, fairly safely. I think you'll find that to be the case. So have a great day. Please like, subscribe, and bye.